Dear students, I have come with the module 3 for accounting. Module 1 I have explained the basic concepts, advantages, limitations, basic terms. And module 2 I have explained accrual and cash basis of accounting, accounting concepts and accounting conventions. Now this module 3 is an important module where I am going to explain. First module will be about the vouchers. Vouchers are the base for any audit, or it's the proof for any transaction. So the recording of transactions is based on vouchers. So that I am going to explain in module 3.1. This is a theoretical module. In the module 3 itself, the other two modules are based on balance sheet equation. That is the basic principle for double entry system of accounting. So this module I will explain about the vouchers, the different types of vouchers. Then we will continue with the other two modules, that is balance sheet equation and the problems. So I want to explain about the vouchers. So recording of transactions. Why vouchers are important? See, there are 5 points I want to explain. One is a voucher is an evidence of a transaction. If I paid electricity bill, if you paid rent, if you paid salary, there is a voucher for that. That's a proof that you can show for auditing and for any purpose. When you are writing in the journal or ledger, this proof is required. Then it's used for tax audit. Then basic facts about the transaction, to whom the salary is paid, to how much amount you paid, when you paid, the date, the serial number. Then the detecting errors and frauds. If you have done any mistake in payment or anything, you can trace the transaction. Then how you made the payment, whether it is a cash payment or a check payment. Then if you have missed any transactions, if you have omitted any transaction, if you have not entered in the books of accounts, if a voucher is not entered, then you can trace that and you can enter that also in the books of accounts, because then only the accounting double entry principles will be completed. Next is examples of vouchers. What are the examples of vouchers? Cancelled check can be, invoices, cash register. What all cash register receipts, cash sales, cash purchases, all that, computer generated receipts. See, we know most of the cases now it's computer generated bills. So that can be a voucher. Then credit memo for customer refunds. How much refund we are getting, or employee time cards, the time in and time out. Deposit slip with the bank and purchase orders, whatever you are placing the orders, everything can be a voucher. And next is meaning of voucher. So the voucher is an internal document describing the authorizing the payment, whether you have made a payment or you received a payment. So that is the main thing about the voucher. And it's a part of system of control. Voucher, any transaction in the books of accounts, you need to have a voucher, you need to have a supporting document. Now, a voucher typically contains the following information. What all the information? First one is identification number of the supplier. Who's the supplier? Who's the party to whom you made the payment? How much is the amount you paid? The date on which you made the payment. Which account it has to be recorded. Whether it has to be recorded in sales account, purchases account, credit purchases, credit sales, salaries, sundry expenses. Which account this item should be entered. Then any discount you are getting. Finally the signature of the person authorizing that, or the seal of the organization. These are the important things that you can find in a voucher. Next, you have to remember, I am giving a diagrammatic representation, types of accounting vouchers. There are main two types. One is cash voucher and non-cash voucher. Other one or two divisions also I have added with the explanation, but these are the main things. One is cash voucher, which is divided into two. One is debit or payment voucher, and second one is credit or receipt voucher. Similarly, non-cash vouchers we are dividing into transfer voucher and supporting voucher. Again, I am explaining in the next slide. So, types of vouchers, here I have theoretical explanation. I have included 4 points. So, vouchers are divided into 5. One is cash voucher, non-cash voucher. It is also called as transfer voucher. Then compound voucher, source voucher and accounting vouchers. So, this I am going to explain in detail. So, what are cash vouchers? All cash transactions will be recorded in the cash voucher. If you are paying salary as cash, if you are paying rent as cash, electricity bill as cash, all these can be cash purchases. Then two types of cash vouchers. One is debit cash voucher and second one is credit cash voucher. So if it's a debit cash voucher, for this we are using for cash payment. So Examples can be paying cash expenses. It can be salary, rent, purchases, anything. Buying goods, payment of investments. Investments if you are LIC policy or if you are making a recurring saving deposit. This is a debit voucher. Then payment to creditors, whatever amount due to the creditors you are paying. Then depositing money in the bank. So these are all the examples for the debit voucher. Similarly, if you come to credit voucher, this is for cash receipts. When you are receiving cash, it will be a credit voucher. So receipt of income. If you are getting sales, cash sales you are getting. So that is a receipt of income. Cash receipt from sales, cash receipt from investments. Any investments, any interest you are getting, or when you are selling investment you are getting an amount. Or cash sales of fixed assets. If you are selling a fixed asset you are getting some income. Cash receipt from debtors. All this can be credit vouchers. Now we are coming to the next classification, transfer of non-cash vouchers. So non-cash vouchers, you have to remember that it's not cash. That is the first distinction. It can be credit purchases and credit sales. Second one is credit purchases or credit sales of fixed assets and investments. So when you are taking fixed assets, I told you we are not taking it as revenue item. It's a fixed item. So fixed assets and fixed investments, credit purchase or credit sales. Then return of goods which are purchased on credit. Then also it's a non-cash voucher. You are purchased on credit and you are returning back to the supplier because it may not have compiled with the conditions, terms and conditions of the sale. Then providing depreciation. You are not paying any amount. You are just showing an internal book entry. So that is, it's a non-cash voucher. Then return of, when you are writing off bad debts. This is also a non-cash voucher. Then what is the format for voucher? So format for voucher, you have to remember that identification number of the supplier will be there. Organization name or from where you are getting that, it will be there. Then what is the payable amount? What is the amount involved? What is the due date for payment? Accounts for recording liability. So what is which account it should be recorded? And if you are getting any early payment discount, that will be there. Then approval stamp or the signature will also be there. Next is, we are coming to the compound voucher. See, so far we have explained about one item in the one voucher. If it's rent or sales or purchases or sales, anything, one item only will be recorded in the cash voucher and non-cash voucher. Whereas when we are coming to compound voucher, as the name indicates, more than one debit or more than one credit will be there. So transactions that involve either one debit and multiple credits or multiple debits, one credit. So multiple credits and multiple debits, anything like that, more than one. So then it will be a compound voucher. Examples, depreciation of all fixed assets in the organization or unpaid wages for the month or salary paid to the staff. All this can be, so many entries will be there. So that is the compound voucher. Now source voucher. So this is another classification. What is a source voucher? Source created while entering into business transaction. Source vouchers are created while you are entering an entry into the business transaction. So that will give the complete information about the transaction. That meaning whoever made that instrument or whoever made that voucher, they have to sign that. That is the evidence for the transaction. See, for example, if you are paying salary, if you are paying a rent, who is the person sanctioning that payment? So that his signature will be there. Rent receipts, bill receipt for cash sales or cash purchases. All these are, whoever authorizing that, this signature also will be there. So that will be the evidence for that transaction. So that is the meaning of source voucher. Then accounting vouchers. Accounting vouchers, you have to remember that documents which analyze business transactions from the accounting perspective. So this is also this is another classification when we are talking about from the accounting perspective, when we are calling it as the accounting vouchers. So this is the proof for recording transaction. Based on the supporting vouchers. Anything, any item in the books of accounts, it will be supported with the voucher. So, and always you have to remember that the person involved in that voucher, they have to have their signature, they have to put their signature. That will make them accountable so that you can reduce errors and frauds, misappropriation of money. So, all these advantages are there. We are making the employee accountable for the transaction. That is why we are asking for signature, for his signature. Then cash vouchers and non-cash vouchers are examples for accounting vouchers. What is the cash receipt? What is the cash paid? Then essential features of a voucher. This not only in accounts, when you learn auditing in final year BCom, then also you will learn that this is an important topic, essential features of a voucher. So vouchers have to be documented. So it should be used for a long term. It should be used in the organization for a long term to keep that as an evidence. So good quality paper you have to use, and the company name of the voucher should be there. Date of the transaction should be there. Serial number, anything, the serial number will be clearly displayed. Name of the opposite party to whom you are making the payment. Exact amount in words and figures will be there. Name and signature of the person. Again, to make the person responsible, name and signature of the person should be there. Name and signature of the person with the seal and signature. That is very important. So these are the essential features of a accounting. So this, we have come to the explanation, we have come to the module, that is, we have come to the close of the about the vouchers. This is the theoretical aspect, and this is what I want to explain. And we are continuing with 2 more modules where I am going to explain the important topic, that is balance sheet equation. 2 modules I am using for that, because you have to be thorough with that explanation. That is the base for double entry transaction. So that I am going to explain as 2 modules by explaining with the help of problems. Thank you. Subscribe to my channel and give me your valuable feedback. Thank you.